new channel, the pioneers, the founding fathers of this channel, where I'm going to be doing live streams on this channel, and I'll be doing a lot more frequent videos on this channel. Doesn't mean the quality is going to be low, but on this channel, I'll be speaking a lot more on politics. Today's video is going to be more finance based, but it will have some politics in it, but there will be a lot of political stuff on this channel. I'm going to be brainstorming on how I want to do a live stream show. I do eventually want to work up to doing a 1 to 2 hour live stream, at least a few times a week. Ideally, I would like to do it 5 to 6 times a week, but it'll just be experimenting with you guys. So go ahead and type one. Oh, you read my mind, Alex. You already typed one. Because this is a new channel, I was a bit worried that something would go terribly, terribly wrong with the live stream. So I'm just going to go ahead and wait for everyone to join the live stream, because I just posted that video on the main channel about how I'm making this second channel for these live streams and for this more frequent content, for content that's more breaking news. So welcome to you guys. You guys are the first people to watch a live stream on this channel. Historic. So again, yeah, it's going to wait for everyone to join the live stream. Obviously, the views will be a bit low because the algorithm will be like, hey, what's this new channel? They don't like to push out brand new channels, so it'll probably take a few live streams for them to really pop off in the algorithm and for my regular viewers on the main channel to come here. Woohoo. Yep, thanks for that, Alex. I did have a bit of issues with the stream before. My internet was pretty bad. It was disconnecting at the start, but now it appears to be good. So yeah, so in this stream, we're going to be going over the home. Hi, Ephraim. Yes, awesome. It's good to have you here. Life is good. Hello. Welcome to the stream. In today's video, or stream should I say, we're going to be going over something that I don't think many people are aware of that's happening, is the home insurance crisis. Now, we're going to see, I think, over the next couple of years, a lot of areas that has very, very expensive real estate become uninsurable. Like, for example, in California, like what we're seeing in Florida. Now, I don't know if many of you people knew, but what really caused the financial crisis in 2008 was when the insurer for those mortgage-backed securities went bust. When the insurer went bust, that's really when the crisis began. When the backer of last resort went bust, that's when things really went south. So again, seeing more people are joining the live stream. So we'll give it a couple of minutes before we really get into the video. And wait for everyone to join. Thanks, Alex. But yeah, that's what we're going to cover in today's video. And I've got a lot of news. I've got a lot of data to show that things are looking very, very bad in the housing market, and specifically with insurance, and how the insurers are going to be in big, big trouble. And a lot of these homeowners that thought they were insured may not have the coverage that they thought they had. Alrighty, so more people are joining. So again, today we're just doing a short live stream on this specific topic, but what I eventually want to do is maybe do an hour to 2 hour live stream where we cover all the morning. We may, for example, cover all the morning finance news and political news, and then I may do or if it works better in the evening, may do an evening stream where we cover all the mainstream talking points for that day, or what happened in the markets, and some political news in the evening as well. We'll just go ahead and do a few live stream and see what you guys enjoy the most, see what works out best for you guys. G'day, Mark. Okay. It's been about 5 minutes now, so I think we'll get into the video, and I can edit the first 5 minutes out of the video after the video goes up. So, okay. All right, ladies and gentlemen, in today's video, we're going to be going over how home insurance could potentially trigger the next financial crisis. Because what many people are unaware of is a lot of these homes are getting destroyed by these natural disasters. These areas are now becoming uninsurable. Also, these insurers are taking huge financial hits. And what actually led up to the financial crisis in 2008 was when the insurer for those mortgage-backed securities went bust. So we're going to dive deep into this story of this crisis that is brewing at the moment, see what the consequences are going to be for you, for me, for the markets, for the economy, how we can prepare and position ourselves so we aren't affected by this crisis and may even be able to come out better after this crisis. So I'll go ahead and pull this story up here. Is the catalyst for the next financial crisis homeowner insurance? So that's exactly what we're going to be covering, and we're going to dive deep into this because I've got a few charts here, and I'll go ahead and move myself so you guys can see these charts a bit better. We can see here in Miami, MSA Zillow Home Value Index, look at the housing bubble. In 2008, they were valued around $300,000. Now they're nearly double at around $575,000. But like what we saw with the natural disasters that's happening in Miami, this is now spreading across the country. Not only that, we got another chart here of where insurers are losing money. So go ahead and pause it here, so you guys can see all the states where they're having the biggest losses, and we can see the trend here. The areas that are having losses or are losing money is growing rapidly. Now also this next chart here, United States billion-dollar disaster events from 1980 to 2024, and this is CPI adjusted. And as we can see here, since the 80s, we've had a rapid decline in the losses from these natural disasters. Also in this next story, how home losses from LA fires hasten an uninsurable future. LA fires could hit European insurance giants with about €1 billion in losses. That's just in Europe, but we'll go over the other areas. But this is going to be big issues for these insurance companies. So let's dive a bit deeper into this article here on what's really going on. So in October, 2 brutal hurricanes hit the US Southeast, and last week Los Angeles went up in flames and is still burning as this is written. So the first problem is migration and inflation. So the past half century, tens of millions of Americans have poured into sunny states like Florida and California that are catastrophically unsuited for large populations. And that's exactly right. A lot of people are moving to areas that didn't really have high density housing in those areas. They're moving more and more into the bush, more and more into these fire-prone areas, and people, for example, moving into floodplains, moving into areas that maybe used to be swamps, and it's going to be hell for these insurance companies. So specifically, the former is in a hurricane alley and is a guaranteed direct hit from a Cat 5 one of these days. So it's not a matter of if, I'll just adjust myself here, it's just a matter of when. While the latter, this is California, is prone to droughts and raging wildfires. So while this ill-fated mass migration was happening, the federal government was inflating away the dollar. Now, you may say, well, look, the dollar's going up. Well, that's because all other currencies are crashing, and the dollar is just the best fiat currency out of bad sound money. Fiat currency is not sound money. Gold and silver is. We all know every single fiat currency they've created throughout history, all of them have failed, every single one. So this is causing the prices of financial assets like homes, especially in popular coastal cities, to soar to stratospheric highs. So that's exactly right. This is happening all across the world. Coastal homes, they're skyrocketing in value. It's very unsustainable. And when I think this financial crisis hits, what's the first thing people are going to do? A lot of these wealthy investors or these wealthy homeowners, they'll have their primary residence, and then they'll have a holiday residence probably on the coast somewhere. They may have it up in a mountain somewhere, in a nice area, in a nice forest area where they go camping. But the first thing they're going to do is sell that second home when things really start to hit the fan. So this is all leading to a deadly combination. So combine massive population increase with soaring home prices, then toss in reoccurring natural disasters, and the result is a doom loop for insurance companies that have to replace those multi-million-dollar houses. So that's exactly right. These insurance companies are facing tens or even hundreds of billions in losses. And like they said here, it's creating a doom loop. And many of these areas are simply going to become uninsurable. Because I already went over previously in other videos, we don't need to repeat this, but quickly, it's looking like it's going to cost 150 billion. Some estimates are saying 250 billion. We've saw about 12,000 structures have been destroyed, as we can see here. And in the Pacific Palisades, we're seeing properties or houses that are worth $7 to $20 million. And what many people don't know is, when the insurers pulled out of these areas, they had the FAIR plan, which is the state insurance, but that only covers properties up to $3 million. So a lot of these properties that got destroyed may have had no insurance at all. So we'll go here into this next part of this article. This was when State Farm non-renewed approximately 1,600 policies in the region in 2024. Approximately 30,000 homeowners and 42,000 apartment policies that dropped statewide, citing rising costs and risks. So they all knew this disaster was coming, but the government didn't do anything. Gavin Newsom didn't do anything. Karen, the LA mayor, she didn't do anything. They said the decision was not made lightly, but they knew that this crisis was coming and it was becoming uninsurable. Now, insurance market stabilities are now coming in question because we haven't seen a crisis like this happen in dollar terms throughout US history. This is going to be the most expensive natural disaster in dollar terms because of the real estate was so expensive in these areas. So look at this. At this point, it's not an exaggeration to say the state's facing an insurance crisis of both affordability and availability. Also, just go ahead and drop something in the chat, what your thoughts are on this crisis. What do you guys think this insurance crisis is going to cause on the economy and on the markets? So at this point, it's not an exaggeration to say the state's facing an insurance crisis of both affordability and availability, because 7 of the 12 largest insurers, including State Farm, which represents about 10% of the market share, according to Department of Insurance data, paused writing new policies in 2023. So they're all pulling out and heading to the hills. And this is leading to the question, like it has here, is the world becoming uninsurable? And I don't think the entire world is becoming uninsurable, but a lot of areas in the market like these is definitely becoming uninsurable. So not as an expert on the insurance industry, but as a homeowner who can no longer retain hurricane insurance, and as a observer of long-term trends keenly interested in the way the global risks pile up, either unseen, denied, or misinterpreted until it's too late to mitigate them. So the probability that we're entering an era of globally high risk is increasing, and this awareness is visible in headlines such as these. And also just if the stream's still performing well for you guys, just go ahead and drop one because it's the first time me streaming on this channel. If you can still hear me loud and clear as well. So this is not an abstract. This is not an abstraction though. Many are treating it as a policy debate. Now, like we've seen here in these charts, the risk are piling up. The states that are losing money, like I have in this chart here, are growing. We can see here, since 2013, over the past 10 years, the states that where insurers are losing money are piling up, and this could lead to a financial crisis. So, the losses are rising with inflation, and of course, but the losses are rising far above background inflation, because I brought up this chart here earlier. United States billion-dollar disaster events 1980 to 2024, CPI adjusted, we can see here that the losses are mounting up. Now, this raises a point few seem to ponder. The world isn't simply a political structure, yet virtually all proposed solutions to every problem are political or technological in nature. And that's exactly right. We've had a huge political disaster for them trying to fix these issues on what's going on in California. So the problems being problems being exposed do not lend themselves to tighter political policy fixes that magically return the world to a past era of lower risks. But they may transfer the risk and losses to the entire system, increasing the potential for a systemic collapse. Now, again, like I was saying, this is what caused the collapse in 2008. So millions of Americans are thus left with much of their net worth tied up in houses that are going to be very expensive to insure, and if insurance is available at any price and are therefore unsellable. Because that's right, either these areas are going to become uninsurable, or insurance is going to become so expensive people can't afford it anymore. I've had some people email me to say that their insurance has doubled in some of these areas. Some saying they're tripled, and some are saying that their home insurance is now more expensive than their actual mortgage. You know, imagine if you paid off your mortgage, you plan your retirement to have a good retirement. You think you're going to have enough money for your retirement, but then all of a sudden, your home insurance cost is now more than what you're paying in your mortgage. So drop your thoughts below, because I'm not seeing anything in the chat. I just want to make sure that the stream is working well. If the stream's working well, go ahead and drop 1 in the chat. So the resulting reverse wealth effect, in which evaporating home equity causes people to reduce spending or sell other assets to fill the gap, could begin at the coast and sweep through the rest of the country, catalyzing the next financial crisis. So that's right, this could definitely cause the next financial crisis. Yes, it's all good. Thanks, Alex. And we've also, thanks for that, Richard. But we've also got more data here, not just this article here, to show that things, the risks are building up. So look at this. Home defaults have skyrocketed. This is unlike anything we've seen in a decade. So this is the delinquency rate for multi-family housing. Thanks for that, Kat. We can see here, 2008, they rose to just over 0.4%. And we can see with this chart here, things are rising again. Thanks for that, Mark. Things are getting very, very close to 2008 levels. It's just that things like this take time to play out. Now, not only that, but we can see here, caution, home buying conditions have collapsed to levels never seen since 1960. Because what have we seen happen over the past 5 years? Not only home prices have gone up, but interest rates have gone up from below 3% to now 7%. So interest rates have gone up pretty much. If you think about the cost of your interest on your loan, has gone up nearly 250%. So people don't feel like buying homes. Buying conditions are the worst since 1960. And this is completely unsustainable, everyone. I know it feels like this housing bubble is going on forever. That's what a lot of people said in 2008. But eventually this bubble will burst. Because also we've got some alarming things that are happening underneath the hood of the financial system. And this is what I spoke about, at the start of when I first created my channel around 2020, 2021. We talked a lot about the repo markets at the Federal Reserve. So the reverse repo is declining quite rapidly and has fallen from 2.5 trillion to under 150 billion in just 24 months. So once this liquidity is drained, we could start see things in the financial system get tight. So this is where the banks lend money to each other overnight. The banks need this for liquidity to pay out deposits, to pay interest on their products if they need money very, very quickly. And as we can see, this reverse repo market is collapsing. So there we have it, everyone. The next catalyst could be insurance. A lot of people aren't going to be able to get home insurance. A lot of the insurance costs are going to go up through the roof. We're seeing a housing bubble go up like you wouldn't believe. So a lot of these people that may have been insured for $500,000 or $250,000 when they first took it out 10, 20 years ago, when they go to rebuild, it's not going to cover them. We're seeing more states have losses. We're seeing the costs from these natural disasters go up huge for these insurance companies. And again, we're seeing delinquencies rates rise for the housing market, buying conditions have never been worse, and liquidity is tightening up in the financial system. So what do you guys think about this? I'm thinking of making a live stream show where maybe I'll go live in the morning or the evening to see what works best for you guys. I want to eventually do a 1 to 2 hour live stream where we can sit here, chat. We can go over the breaking news in the morning or the evening, sort of events that happen that day. You guys can put requests what you want me to cover for these live streams. Also, we can react to some videos because what I've noticed with these live streams, after about 45 minutes of me talking non-stop with high energy, I start to lose my voice. So when I do those 1 to 2 hour live streams, we may, there may be something on Fox News that is trending and a lot of people talking about it. We can react to that because that way I don't have to read for 2 hours straight, and I can do much longer live streams without losing my voice. We can cover many other topics, or there may be a video put out by CNBC or the Wall Street Journal that I can react to, and we can go ahead and go over that together. So what do you guys think about this? Thanks for joining the first live stream of the second channel. We'll be putting out a lot more content. Thanks for that, Alex, about the new approach. We will see how it goes. Maybe morning time, US, that would be evening here in Australia. Maybe about 9 a.m. New York time, I might do another live stream. So go ahead and tune in for that. That would be around 1 a.m. Australian time for my Australian viewers. Yeah, thanks for that, Richard. Yeah, well, also, I do this for you guys. So I enjoy doing these live streams. You guys enjoy doing the live streams, so it works best for us. So thanks for watching, everyone. You're awesome. I'll see you all in the next video.